Hello everybody, welcome back. Today is 21st of May 2025 on Wednesday, and my name is Sino Shadian, and in this video I'm gonna cover this three topics: trend, spike, and channel and trading range. So throughout this video I'm gonna just talk about all these three steps of the market and see how do they form and how do they make transition from one into the other. Okay, so let's begin with XAUUSD chart. And XAUUSD in the beginning of New York session, which is this vertical line, started with a spike upside, then it entered in a small tight trading range, which is this area here, if you see. And also I can call this also a wedge pattern. If you just look this part, it is a convergent triangle. It breaks from above, can't make it, it is not successful, comes back down, and then rallies up again. When I was in the market yesterday in New York session, I got this trade and I put my profit target exactly here and my stop loss here. Unfortunately, it hit it at the end of the night, and the reason was that previously we were in a trading range. If you see just my video on previous day, I measured from the bottom of the trading range to the top of the trading range, which is this green line, and I had my profit target here. It hit it correctly, exactly, and then came back a little. So getting back to the previous subject about the spike, after a spike which is extreme, which is an extremely high volume money, when it rushes in series of candles with closes near their highs usually forms, and after this phase market enters into a slower process which we call it the channel. If you see, this is in a small channel after this spike here, and when I woke up in the morning, I saw not just this channel is a small channel in a bigger pattern, but also it works as a trading range area. And the reason is that after the channel phase, we have to enter into a trading range area, because this is where buyers and sellers both are confused and they don't look for serious buys or serious sells until market shows that the trading ranges are broken, and then the new cycle begins. So three phase: first spike, then channel. And I have told you before that channels usually end in three touches. And the first touch is the top of the spike, which is this spike, and then three touches: 1, 2, and 3. Number 3 overshoots and then comes back down and touches the bottom of the channel. And when it touches here, you should see whether it is going to break it down and touch the bottom of the channel. So this is the bottom of the channel. Let me just change the color to purple. So market usually, if it just could break this trend line, it could manage, it could just touch the bottom of this trend, which is not the case here. So it just started to create the trading range exactly right here. So now it's in a trading range. I can clearly see that after this phase, the spike, channel with 3 touches, now market has entered into a trading range. It comes down series of three very big, beautiful bearish candles, which shows that sellers are active in the market. So buyers are a little suspicious about whether this trend is going to resume and continue for higher prices, or we have entered into the trading range, which in this case, I believe right now we are in a trading range. If you see, the market has come down, up, down, up, down, up, and it finally breaks the top of the day, which was for nearly 4 hours from the beginning of the day, and finally it breaks above but can't just stay above and continue its way, and it just comes back down again. And in trading ranges, this is my strategy, that when market touches the top of the trading range, I wait to see whether it's going to just come down or continues going up. And when it comes down and it just breaks the previous low, I try to sell the highs. It means, that said, this top here is a good sell signal for me, because this is the first leg when it touches the top. This is the first leg, and I'll be waiting for the second leg, and this one is a very beautiful second leg forming with two legs itself. This one is also a wedge pattern, 3 pushes, the first push up, the second push up, and the third push up. And also lots of buyers there are here who see this as an bull flag. So if I just change the color to make it more clear, lots of people see this as a bull flag, which I think it could be. And if there are lots of buyers who have entered on this bull candle, and but the thing is, I'm a little suspicious because I still believe that market is in a trading range phase. So the sellers would view this as a first leg. Yes, it's in a small 2 legs down in the pattern, in the wedge pattern itself, but you can consider this as even for the first leg with 2 moves, 2 legs downside. So the second leg might form here. This is an A, B, C correction, and market can just resume from this side and form the second leg down. So let me just see to just consider this fact that this also is a possibility for today. This is the leg 1, and the second leg could be somewhere around here, but fortunately we know that we can measure the market, measure the legs. So from the top to the bottom, let me change the color. So if this is the first leg, this is going to be the second leg. So if you just short the market around here, you can put your stop loss here, which is an actual the best place. You see, this is the bottom of the trading range in another bigger trading range. So this one, if I consider this high of the day as the top of my trading range for today, and also this low as the next level for support and also resistance, as long as market is in this trading range, I'm going just to sell highs and buy lows. You see, sell highs, and when market reacts to this level, I'm going to buy the pullbacks, pushing the market higher, comes down again. You could enter here, and then you can just consider this as a second leg. We should see what the market is doing right now. So the second possible leg here, this is a good place to take your profit targets. So all in all, let me just sum up everything. We know that markets have 3 steps. The first step is the first step begins with a spike, which is a very strong trend, gaps between each bar from top of the previous bar to the beginning of the next bar. Okay, and then market enters into a channel, and channels usually form 3 touches of trend channel lines, and when you should be waiting for the third touch, which is the most important touch of the trend channel line. If it touches and just overshoots the trend channel line, you should be waiting, and for 80% of time it comes back down to touch the bottom of the channel. When this happens after the third push, you can expect that somehow market has entered into a trading range, which is the case here. Down, up, maybe a high, maybe you can sell market here and be waiting to touch your profit targets here. And as long as market is in this consolidating place, I'm going to just buy low, sell high, because this is my strategy in trading ranges. All right, so let's just make an example on EURUSD for today. This is an analysis and also an in fact an example for a spike, channel, and trading range. Let me just get back down to the previous day, which is the New York session, began on this vertical, right? This is the New York session. Market had a spike up, then it entered into a trading range. So 3 pushes we have here. So the first push, which is the top of the spike, the second push, the middle of the channel, and the third push is right here. Okay, so 1, 2, 3, and this is the bottom of the channel, top of the channel, and not necessarily all channels are parallel. So as an example here, you see this channel is just a convergent channel. So the legs just become tighter as the channel resume going higher, and finally after the third touch it manages to break below the channel line. If I zoom a little, you see here this is the break of the channel and gap bars with moving average, and I expect market from this level. I always expect the market to somehow enter into the trading range in this area, but there is always an exception, guys, as the case is here. Market just let me close my position because market I had forgotten to put my stop loss here. Market hit it. We will later talk about this. This is the possible trading range between the top of the channel to the bottom of the channel. But another cycle begins, which is an exception, and shows that today is so strong. Buyers are extremely strong. After this channel, another spike begins. And just take a look at this case here. A spike. Let me just write it. This is the spike, SP, and then market enters into the channel phase, which is an weaker trend comparing to a spike phase. This is the channel, and we know that channels which is usually finish in 2 touches, the first touch, the second touch, and the third touch, which has been overshot, and then comes back when it's overshots, comes back down to touch the trend line, and even plunges a little bit down. So if you had taken your short setup here on this candle, for example, you could get out of the market exactly here when it touches the trend line. And Then I expect the market to enter the next phase, which is the trading range, and sometimes trading ranges become wider, which is the case here. So spike, channel, trading range, it just breaks from the top of the trading range, goes back up. Lots of people think this is the resumption of the trend. You can, guys, take this trade if you see a pattern like a double bottom here for the trend continuation, and from the top of the trading range to the bottom of the trading range you could place your profit target somewhere here, but this is not the case. So market comes back down, it closes below. This is a very good sell signal for me if I was in the market, and I expect this as a fail breakout. So let me just write it for you. So this one here is failed failed breakout. That's why this is a good setup. So when the market comes back down right here, the next place that I expect market to reverse back up is the bottom of the channel. This is how cycles form. Again, a spike, channel in 3 touches, breaks the channel, enters into the next phase, which is the trading range, TR. Okay, trading range. It breaks from above, can't just resume the trend, comes back down. Now market has formed another even stronger, another wider trading range, which is the bottom here and top here. Right now you can see that market is breaking from top of the trading range, and we have to see whether this is going to be successful or not. But as the market is forming its bullish candles, let me talk a little bit about this place. I started to buy on this candle because I saw market is rejecting this supporting level, and to me the bottom of the channel, as I told you, is the first level that market is going to touch. When I saw this, that market is rejecting the price, I started buying the pullbacks, which is my strategy in trading ranges. And I recommend, if you somehow realized you're in a trading range, you should just wait in the area patiently until market touches the bottom and also the top of the trading ranges to see whether market is going to reject them or not. When they reject, just wait patiently for the pullbacks, and even then when the buy, whether it's a support, you can just buy the close of every bullish candles because they are all pullbacks, and then you can expect market to be pushed upside. When I bought it here, which was a really good trade, you see this this arrow upside. My stop loss was exactly here because I wanted to take this trade. The first risk to reward and the second risk to reward. This is my entry and this is my stop loss. And then market came back down and just hit my stop losses. But do I care? Of course not, because this is my strategy, because this is the case that has been working for me for a long time. I'm not going to change my strategy, okay? So as long as you you choose your volume correctly, you don't have to be worried about what market does. When I saw this, I saw that market is rejecting the price again. So I could consider this as a double bottom in a trading range. Bottom of the channel, bottom of the trading range, rejects, comes back down, a double top, it goes up, and when it started coming down, I started buying again, but this time I put my stop loss a little lower behind this low. And see, if this is my risk, these are more rewards. First reward, second reward, and third reward. So that's an 1 to 3 risk to reward ratio. That's really good. However, I generally don't care about risk to reward that much. I only look into trades equation and higher possibility. All right, so that's the case for me, guys. Now that trend has broken the top of this this trading range, this is going to be my strategy after the cycle. Spike, channel, trading range. I'm going to see whether this the top of the day is going to hold this level, or market tries to reject it back down to touch the bottom of my trading range. If it forms a double bottom here, and then I see a candle closing on the top, I'm going to buy again and put my stop loss below the double bottom if I see such pattern. And what would be my profit target level? I'm gonna measure from the bottom of the trading range to the top, and then drag this measure move target so it is somewhere like here. So if I see market just this place, which is the top of the trading range and top of the day, rejects the market upside, I'm going to buy it again and put my stop loss down here. So let me zoom a little bit. If this is the case and I buy here, I'm going to put my stop loss down here and go for another 1 to 2 risk to reward ratio, and my profit target is exactly like here. So guys, if you just could manage to read the price action correctly, you don't need again to obsess yourself with different indicators. Price action can tell you everything. You have to just read it correctly. And if you just follow my channel and subscribe and hit the like button, you can be updated with all necessary information you need about the market cycle. I'm going to every day talk about the spike, channel, and trading range phase, and as long as price action repeats itself every day, you can after a while figure out how markets moves and how it works. I'm gonna talk about entry points, exit points, where is a good place to put your stop loss, and also where is the best place to get out of the market every day. So this is the New York session. In the afternoon we will enter into the New York session, and tonight I'm going to just record another video talking about market cycles and trends and different strategy. Stay tuned and wait for the next video. Thanks for watching and see you soon.